The biggest bank in the USA, we're talking about JP Morgan, has just chosen the blockchain to launch its tokenized fund. I'm going to explain everything about this. And we also talk a lot about Ethereum, about Bitcoin. We'll talk about Circle, who bought a crypto company and basically ignored the token. And the token crashed as a result. We'll talk about Ripple, MetaMask, Ondo. In short, I've got a lot to tell you today. Let's start with crypto prices. We're down today. Bitcoin at $87,000, Ethereum at around $3,000. It's a really bad day for cryptocurrencies, but you're still going to move on to the news because despite the price action, there were actually some positive things today. First of all, BitMine keeps buying Ether. They revealed that they bought $320 million worth of Ether. That's huge, about 100,000 ETH. They keep buying week after week. Last week, they announced around 400 million purchase. This time, $300 million. So yeah, they're not slowing down. That's very good news for Ethereum. And it's the same story for Bitcoin. Look at this strategy. Just bought more than 10,000 Bitcoin for almost $1 billion. About $980 million. Once again, more than 10,000 Bitcoin in a single week. They did the same thing last week. So they're back to buying aggressively. Just a reminder, both of them now hold roughly the same share of supply of their respective assets. Strategy holds about 3% of all existing Bitcoin, and BitMine holds around 3.2% of all Ether in circulation. And BitMine keeps buying on a very regular basis. I think they're really aiming for the 5% target. As far as I know, Strategy doesn't really have a fixed target. They're just going to keep buying as much Bitcoin as possible for as long as possible. Now let's talk about JP Morgan. Like I said, the biggest bank in the United States. If you look at the ranking of the US bank by assets under management, JP Morgan is number one, more than 4,000 billion in assets, 4 trillion. That's absolutely massive. It's ahead of Bank of America, and JP Morgan has just launched its tokenized money market fund on Ethereum, on the Ethereum network. A tokenized money market funds means if you invest dollars and you get the yield associated with the US Treasury bills around 4 to 5%. This is exactly what BlackRock already did with this BUIDL fund on Ethereum also at first. JP Morgan is now doing the same thing. The fund is called JP Morgan On-Chain Net Yield Fund. The ticker is money. And it's launched on Ethereum. And once again, this shows something very important. When institutions with billions and billions of dollars want to come on chain, they don't go to small projects. They don't go to projects controlled by a single company. They prefer a neutral playing field, a network where there are already billions and billions of dollars deployed. And yes, the preferred blockchain for these institutions right now is still Ethereum. And that's very good news for the Ethereum network. It shows that when large institutions show up, it happens on the Ethereum network. This fund will start with around 100 million initially seeded by JP Morgan. Then JP Morgan clients will be able to buy into the fund. This is not for retail investors, it's for institutional players who want this kind of products, on-chain treasuries. The clients are more likely to be DAOs or crypto companies. For example, Ondo will probably buy this type of fund and then announce a partnership with JP Morgan, but be careful, don't fall into the trap. There are no partnerships between Ondo and JP Morgan. We're really talking about a major institutional player getting involved in Ethereum. And honestly, that's excellent news for public blockchains in general. And for Ethereum, of course. But to be fair, I would have said the same thing if it happened on Solana. If I had seen this on some other public network with real community and solid set of validators, I would also have said it's a good thing. That said, for me, Ethereum still stands out as the most decentralized option and the one institutional players trust the most. If Bitcoin had native smart contracts and truly tokenized real-world assets, I'm convinced institutions would have chosen Bitcoin, but Bitcoin is not that. I'm not anti-Bitcoin. I genuinely love Bitcoin, but we're talking about different use cases. Bitcoin is primarily a store of value. Ethereum, on the other hand, is more about real-world assets, stable coins that you can manipulate, plug into decentralized finance, use in smart contracts, and build all kinds of things on top. It's a different universe, and I think that's exactly what attracts institutional as well. Now let's talk about Circle, because something very interesting just happened here. Circle is the company behind USDC, which is the second largest stablecoin on the market. They just announced the acquisition of Interop Labs. So who is this company is the company behind the Axelar project. Axelar is it's the blockchain interoperability and bridge project. Circle has acquired the company behind Axelar, including the intellectual property and all the underlying technology, but they did not acquire Axelar itself as a protocol. That's an important distinction. The Axelar project will continue to exist, but it will now be managed by a different team. It's no longer the original team that built it. It's another entity taking over operations. Meanwhile, Circle is absorbing the entire team, IP, know-how. Why? Because they want to develop their own blockchain, ARC, and they want to make USDC as available on as many blockchains as possible. They already have the bridge CCTP that allows this, and now they're adding even more talent and resources to push that vision forward. So why am I bringing this up today? Because the timing is very interesting. Just yesterday, I was talking to you about the issues around Aave and the competition, or whether the tension between the company that is developing Aave Labs, and the Aave DAO. And now, here with this Circle and Axelar situation, we're seeing a very concrete example of what happens when you have a company with shareholders whose economic interests are not aligned with those of the token holders. In this case, the company was sold to another entity without creating any value for the Axelar token holders. The worst case scenario, and I don't think it will happen, but let's imagine for a second that a large crypto company, let's say Tether, Ripple, or another big crypto company decide to acquire Aave Labs. Aave Labs is the company that owns Aave.com, the main entry point to the Aave ecosystem. By doing that, they would effectively be buying the gateway through which users access Aave, and then they could add fees, add extra layers, add I don't know, KYC or God know what. So yeah, it's complicated. That doesn't mean the Aave token will necessarily crash because the protocol disappears, because it clearly the protocol is decentralized, but it shows that there is a real issue, there is a real misalignment when crypto projects are structured around companies with shareholders whose interests diverge from those of the token holders. And that's something you always need to be very careful about. Up until now, people mostly said pay attention to the token, what's the utility of the token, what revenues or fees does it generate? But now you also have to look at the broader structure, the overall setup of the project, how the token relates to the company behind it and to the foundation involved. And yes, it's complicated. I get that. Unfortunately, it requires a lot of research. There's no simple shortcut to fully understand this. As a result of this news, the Axelar token dropped. We're talking about 14% decline in 24 hours. But if you look closely, it's been trending down for a while now. Personally, I think it's only a theory, but insiders knew before that this was happening and started selling some, I don't know, a few weeks ago, because at the end of September, the market cap was around $300 million, and now it's down to just over $120 million. And if you remember the peak of Axelar, we were above 1 billion, around $1.3 billion in market cap. So honestly, I think Axelar is almost dead at this point. In any case, they're facing massive competition from a lot of different interoperability projects. And on top of that, they really lost the core of their team. That's obviously going to be a serious problem. Speaking of interoperability, Ripple has just signed a deal with Wormhole. Wormhole is also an interoperability project that makes it fairly easy to issue cross-chain tokens. Basically, wherever Wormhole is deployed, you can deploy your token. Ripple just signed an agreement to deploy the RLUSD, their stablecoin, on several layer 2 blockchains like Base, Optimism, and other layer 2s. RLUSD is already live on the Ripple blockchain and on Ethereum, on the XRP ledger. So yeah, it's already available on a few blockchains, but now they clearly want to expand to other blockchains within the Ethereum ecosystem. RLUSD is sitting at around $1 billion in market cap, which is pretty solid. Honestly, Ripple has done a good job with RLUSD so far, and they're trying to push it further into decentralized finance and give this token as much utility as possible. And yes, that goes through cross-chain. So yeah, it makes total sense to do a partnership with Wormhole. It's a smart move if they want to reach other blockchains. Next topic, MetaMask. MetaMask has finally added support for Bitcoin. This had been teased for a long time now. Now it's officially live. I haven't tested yet. I don't really use MetaMask that much anymore, but feel free to tell me what you think, whether it's worked well or not. The real question I'm asking myself is whether we'll be able to connect MetaMask on, I don't know, Bitcoin, MetaMask with the ledger to transfer your Bitcoin. We'll see. After that, in fact, I'm not even sure how useful it really is, because honestly, we don't do much with BTC. We only buy and hold. There's no decentralized app on the Bitcoin network. So yeah, I'm not sure how people are going to use this in practice, but still a good thing. MetaMask didn't really have a choice. They clearly saw the future is cross-chain wallets. They were very late because they were initially focused almost exclusively on DVM blockchains. Step by step, they added other blockchains like Solana, and now they've added Bitcoin. So it's a good thing that they're finally moving in that direction. Next, let's talk about Ondo. We're back to on the RWA, the real world asset team. Ondo announced that they want to launch tokenized stocks and ETFs on Solana. Until now, this was available on Ethereum and the BNB chain. They're now coming to Solana in 2026. That's good news for Ondo also, because it allows them to reach a new audience. It's also good news for Solana, which continues to expand its RWA ecosystem. And Solana is already second in that space. If you look at the data from RWA.xyz and focus on tokenized equities, about half of the total TVL is on Ethereum, around $300 million, and roughly a quarter is on Solana. So this move will obviously increase Solana's share even more. And after that, as always, it will depend on supply and demand. So we'll see if people want to buy the stocks on Solana. Finally, no, you know what? I believe I talked about all the major crypto news. If you enjoyed this content, please feel free to subscribe, to like, to comment, and I see you tomorrow for another video. Bye-bye.